Should you hold cash or invest now? The correction in March was sharp depending upon how your equity portfolio was positioned. They would have fallen anywhere between 10 and 15%. Some portfolios which are more aggressive probably could have fallen more. But in April, we have seen a very sharp reversal, and probably the more aggressive portfolios could have bounced back even better. But we have seen a secular bounce back in almost all portfolios. Now, if you want to invest more money now, you are coming into more money every month through your salaries and your savings, and you need to invest that money, or you are already carrying a lot of money which you did not invest adequately in the month of March, what should you be doing now? Should you just hold the cash and wait for another opportunity like March, or is there another way? Personally, I think waiting for big crashes and corrections can be very, very painful. The opportunity loss of not deploying capital where you see value during this waiting period is often never estimated fairly. In my experience, one should be bottom up and value centric at all times, which means that if you are holding cash, deploy it responsibly whenever you find an opportunity to do so. Don't stop yourself from deploying cash where you clearly see opportunity and you are convinced on the value. The good news is, in any market context, you will be able to see opportunity. All you need to do is keep evaluating valuations and keep sifting through companies and themes and industries to find where you can find the best value. Fit those opportunities to the investment philosophy of your portfolio. If you keep doing this all the time, you will find opportunities in every market context. Let's say you're in a screaming bull market, there will be something that's out of favor. I'll give you a simple example so that you can understand this. Metals were out of favor during this roaring bull market that you had in small and mid caps. And look at where the metals are today. Precious metals were out of favor during the very same bull run in small and mid caps. So, you could have very well found opportunities to invest your cash either in precious metals or in metals. Now, you are seeing a boom in precious metals, but look on the other side and you will find some other industries which are actually defensive in nature, trading cheap. Private banks could be a good example. Look closer and you will find that industries which are in a time correction, because they already were richly valued earlier, are slowly coming into a zone of comfort in valuation where you can consider buying them. So, if you are holding cash, ideally you should look for such opportunities where you can deploy capital in tranches and scale up those opportunities which the market is currently not showing adequate interest in. So, your philosophy basically in markets like the present, where you had a sharp correction and you have had a sharp rally, should be value contrarian. I always like this philosophy for the simple reason that I don't overpay, I buy responsibly, I don't waste the opportunity, I use the cash available at every opportunity, and doing this continuously and consistently for years together leads to superior compounding. It's being active as an investor when the opportunity is before you, deploying capital sensibly by being active at the right time, scaling up your individual investments in a systematic and sensible way whenever the markets correct like you saw in March, and then being very patient and passive with your overall portfolio to allow compounding to do the job for you. If you notice, in the last minute I used both active and passive. You need to be active as an investor when the opportunities are being thrown at you, and you need to wait as a passive investor after you complete investing. Scale tends to be achieved better in a portfolio if you are active at the right time. And if you make it a way of life to be active whenever opportunities are before you, you never get self-doubt on whether you are going in the right direction, whether your portfolio is rightly positioned, whether you will be able to achieve long-term compounding, and whether you are investing with the right people in the right places. This self-doubt basically gets cleared simply by the way you function as an investor. And I am saying this from my own experience as an investor. I have always had these phases when I needed to get more clarity, and I could sense that I was beginning to doubt some investments, some choices, and some market narratives. I was beginning to doubt them. Then I would step back, walk back, take a fresh look from a distance, and then reevaluate what I need to do, reposition myself as an investor, and then take my portfolio forward. But the operating principle is the portfolio needs to move on, you need to move forward. You cannot be stuck in any market. You cannot be stuck with any market narrative. You should not be stuck in any previous market context. You need to be future facing and forward looking. If you have cash now, you must use this forward looking approach to deploy it responsibly. You can't go on a Monday morning and say, oh, Friday the war ended, so Monday I am going to deploy all the cash. You need to deploy it very, very responsibly, very selectively, and very precisely. In March, you had a better opportunity to deploy it in a more aggressive way. Now, you need to control your aggression, you need to control your speed, you need to calibrate your decision making, and you need to precisely deploy capital. It's tougher again. That is why one should not waste a good crisis. Using every good crisis is definitely a playbook for a winning investor. How to use it, how much you want to invest during a crisis, how much capital you want to put into equities when the markets are throwing them away, these are personal choices. But you don't really have a choice whether to do this or not. The extent is personalized, but the decision definitely has to be to participate. Whether it was during that correction in March or now after the rally, you still need to participate, but you need to participate cautiously and responsibly now more than you needed in March, because March valuation gave you so much comfort. Today, that comfort is lost in many of the companies which you probably did not buy in March, and that comfort will be available in fewer sectors and companies after the market has rallied back again. Which means your job needs to be done in an even more responsible way now. You could get another correction sometime, we never know. Preparing for that correction also happens when you are always looking out for where to invest responsibly. Because mentally you get conditioned very, very well and internalize and acknowledge the need to invest very clearly. That is established by all the mental effort that you are going to do now. You are preparing yourself psychologically to invest in the right place. When you see the right place, even now, you are going to put capital in smaller pockets, and when you get a much broader correction, your opportunities expand, your choices widen, and you are able to deploy more capital freely. Now, your capital deployment will probably need to be restricted and restrictive. You cannot be too relaxed, but you still need to invest. So, the answer to the topic, should you hold cash or invest now, is you should keep on building cash and you should keep on investing responsibly. This is a year I would call as an investment year. It is not a year to be wasted. March was an opportunity to invest. Now you may have fewer opportunities to invest. Whenever the opportunities to invest increase, you need to deploy. So, holding cash is power, investing it responsibly is your duty. This is a time to exercise and build your power, and also to deploy that power and use it responsibly. I am sure that all of you will adapt to every market context to do what is right for you and to take your investing to the next level. Thank you for watching this video.